see what is MACD and how to use it for swing trading. So some key points I've noted down. What is MACD and how is it drawn? So I'm going to show it here what MACD is and how it is done. So you might not see a lot of people explaining it this way, but this is how actually it is done. So what I have is here a chart of Voltas, or you could take any chart, Voltas, and here I have MACD. I've changed the settings of the usual settings, and I've updated to 21 and 55. Right, so I'm going to remove these lines and show you what this MACD is. MACD is nothing but moving average, right? And MACD is an unbounded indicator. What it means is there is no boundary for the lines, right? So if you take RSI or stochastic, it has got a boundary of 0 to 100, but MACD is an unbounded indicator, meaning it can just go infinite, right? It's like a stock price. Why is it like that? Because the way it is calculated is like that, right? So right now you have 21 and 55. I'm going to draw two EMAs. So the same 21 and 55. MACD is nothing but EMA crossover, right? So I want to keep it like this. So if you see, whenever the EMA crosses, the MACD crosses the zero line, right? So the MACD line is nothing but a EMA crossover of these two EMAs, 21 and 55. So if you see here, whenever this crosses, this is crossing because that's how it is calculated. It uses two moving averages, and it finds the difference between those two moving averages, and whenever it crosses, so if you look at it, it's an SMA. Right, so MACD is nothing but fast moving average minus slow moving average. Basically it's just finding the difference between these two moving averages. When this is 21 is below 55, it is below zero line, right? And then when it crosses, the difference between these line becomes positive, so this crosses the zero line. So that's it, right? And here you can see it's a crossover, it's crossing zero, that's all. And what is the next one is the signal line. So signal line is nothing but how much your slower EMA is away from your larger EMA, right? So if you see here, your 55 EMA and 21 EMA are quite far, right? So if you look at this, it's around 3% far. Let's see, let's take here. If you see here, this is around, this is like 6% away, right? So this is quite away from your zero line. So in order to find the strength of this difference, right? So we have this strength of this difference. So now the difference is drawn as a line. So what if we just add an EMA or a moving average to this line, right? To this difference, then that is your signal line. So I've given signal as 50. I mean, usually you cannot increase it beyond 50, but there are so many custom EMAs where you can actually go above 50 in TradingView. So right now I have the signal line as 50, which is the maximum, just to be, just to keep it simple. So your moving average crossover is you can find out by this line. And what is the momentum of this moving averages, right? Whenever the momentum is high, your smaller moving average is going to be close to the price, and that way it's going to be quite far. And in that, what it means is it's going to be above your signal line, right? And this point, the momentum has come down, and then this point again, momentum picked up, and then so on and so forth, right? So you can just use MACD and signal line but this is usually a very bad trade setup, right? So you can never use this as a trade setup because it's going to give a lot of false signals. So we'll come to the trade setup soon, but I hope you can understand what is MACD. And now the difference between these two lines is nothing but the histogram, right? If I just pull this histogram, so if you see here, the momentum has gone down, so your histogram is going down, and this is going up, momentum is going up, so this just, you know, started going up, right? So that is all about MACD. And now we're going to be talking about how to use this MACD, right? So to keep things simple, I'm going to remove the histogram. We're going to have only the 0 and signal line, and even I can, so let's just keep the signal line anyway. So whenever, if you notice here, so whenever the difference is quite high, you can see the stock is trending, right? So whenever you see this distance is quite some gap here, and then it is trending, and you can see here it is again some good gap, and again this is a good trend. And if you look at it, there is a gap, there is a good momentum, right? It came down with momentum, and then the momentum continued for some more time, right? But how can we do this? How can we find out when to enter and when exactly to exit, right? So what I try to do is, therefore, let's find the difference between these two, and if this is greater than certain percentage, then we can enter the trades, right? So now if you see 6.7% is the difference here. So at this point, let's keep it as 5%, right? So if I see the difference between these two is greater than 5%, then this is a good momentum, and this is where you can enter, right? So how do I simply find it? So I can just go to MACD. Let me just remove this and keep the MACD alone. So at this point, what is the price? So let's say it's around 1,000 rupees. What is 5% of 1,000? That's 50 rupees, right? So I'm going to draw a line, say 50 rupees in MACD, and this is where the momentum picks up, or this is where the momentum is starting, right? Whenever it crosses this 5% level, you can see, or you can have a good percentage, like this is based on this. So you could adjust this line as 5, or if you want to be really aggressive, you can keep it like 3%, which is somewhere around 30, and this would be your entry, and you can keep it 5, 4, anything you want. There's no thumb rule of how much percentage you should have, but your MACD can help you find out the difference between two EMAs. So let's see historically how this thing has performed, right? And then the momentum is over, it's going to come down. So when you see here, and this is actually crossed, so this is gone up by 20%, and then we're going to see somewhere here, right? And here this is gone up again by 10% around, so sorry, 9.5%, and then here this did not go much, so you would have probably waited and exited somewhere here. So still 5%, not 5, probably that's just 0%. But if you see here again, this just went up by 16%, and then it started falling down. So you get the idea. So basically you draw MACD, and then between 21 and 55 you could experiment with the different numbers. These are some numbers that I use. So whenever this have a fresh crossover, and you can have a specific percentage, and then that could be your entry. And you don't need to enter the same day. I mean, you could just wait for a small pullback or a red candle and then you could enter, right? So let's take any other stocks, right? Everything is on bull run now, so it doesn't matter exactly, but let's say Havells, right? Havells has been in this channel for a long time. Let's see, at this point, let's take a difficult one, right? So this is a channel, and this point it is around 1200. So 5% of this would be 60. So we're going to keep 60. Yeah, this would be your 60 line, right? So last time when it crossed 60%, 60 rupees, or this difference crossed 5%, we kind of had a good move. That's again 19%, and when this crossed, that's 22%, or approximately 20%. And when this cross happened, this is somewhere here. If you have entered, this is 16%, right? So if you plan to book like 10% profit after this crossover, you would definitely make some decent swing trading profit. Again, this is on a daily time frame. If you want to just hold on only for like 4-5 days, use 1 hour. So 1 hour could work as well. But again, this is not 5%, right? So your 1 hour difference will not be 5%. You got to adjust your percentage. So this could be somewhere like, what's the number? So here, if you look at it, 1400, that's around probably 2 or 3. 2% if I keep this around 28 rupees. So 28 bucks. So that did not work. 28 seems to be quite high. It never crossed 28 except for one time here. Again here. So you need to play around with numbers. So what I have noticed is it's like maybe 4 or 5 on a daily time frame, but this is hourly time frame. So ideally you got to reduce this maybe 1%, or if we keep 1%, that's around 12 bucks. Yeah, so you could try 1% in 1 hour. So that's the idea. You could actually try 1 hour or 3 hours, anything of that sort. But what I usually do is just go to daily and use this 5%, and you could even use this in charting and filter the stocks. So how do you do in charting? So we will do that in another video. So that's entry based on 5%, and then stock selection, money management. So this is the most important part in swing trading. I'm not going to take much time. If you are an experienced trader, I'm sure you would know this and appreciate it. So stock selection, swing strategy, the challenge is you might get 1 stock today and again 10 stocks tomorrow and 5 stocks later. So you always will have to have some capital to invest in those stocks, to enter swing in those stocks. So that could be really challenging. So what I would do is so always fix your exit time, right? Don't hold it for months together if it is in the cycle or if it is just a flat market. So you need to quickly enter and exit. So probably hold it for 2 to 3 weeks, not more than that, so that you will have your capital for the next stock which might be coming in your list. So that's my 2 cents for the swing trading strategy. Thank you for watching, guys. We'll see you again in another video.